Welcome back. You're still tuned into Trading Hour. Let's talk about some earnings now. Action Construction Equipment saw its revenue surge 13% on a YOY basis. Margin expansion continued, and this was driven by operating leverage and favorable commodity prices. To discuss this and more, we are joined by Saurabh Agrawal, the Executive Director at the company. Mr. Agrawal, good morning. Thank you so much for joining us. Well, it's been a good quarter for you, this despite the fact that there were elections. But tell us what the outlook is going forward, and what was the breakup in quarter one in different segments? How much was the value growth? What kind of volume growth did you see in each product offering?
Yes, good morning. Last quarter was definitely a little less than our expectation because of the elections, but obviously we had planned for that. And I think we were able to do fairly good enough with a 13% growth on a year-on-year basis. And for our cranes, construction equipment, and metal handling sector put together, I think we saw a decent revenue growth there, about 20%. And there was a degrowth in the tractor segment, but obviously that we've taken care of. There was some really good export orders which were getting executed last year, same time, for tractors. So that's why you see the deficit.
Oh, okay. So your agri equipment was under pressure because of a high base?
High base because of a special export order on tractors which we executed same time last year. I mean, but I'm sure that will catch up in quarter 2, quarter 3 coming up.
So what was the normalized growth within that segment, and what are you guiding for?
I think for both the segments put together, I think if I talk of cranes, construction equipment, we should ideally be looking at least a 15-20% growth in this year. And on the tractor segment, about a 15%.
Okay, 15 to 20% overall and 15% in the agri segment. And how much would exports be? You said it was taken care of by exports to some extent. How much it is as a percentage of your order book right now, revenues as well? And what kind of growth are you looking at just the export segment?
Last year we did close to about 8%. So hopefully in this current year, on a company basis, we should be able to better it. And we are looking at executing further export orders in. It's going to start primarily from end of quarter 2 and going into quarter 3, quarter 4. So hopefully it should be above 8% this year as well.
And how much is export as a percentage of your revenues?
Last year it was around 8%.
Okay, no, I thought that was the growth number. So what is the growth that you're expecting then?
See, again, about a 15-20% because the company is going to go 15-20% and we're able to maintain 8%. So the growth will be around 15-20%.
Okay. All right. So you're quite bullish in terms of growth going into FY25 for the remaining part of the fiscal. But if you want to talk about a maybe longer term journey, you had mentioned that, 3x growth from a base of around 2,500 crores is possible in the next 5 odd years. Does that still stand? Are you on track for that? Or do you think that you could probably, exceed it or undershoot it based on the demand factors that you're seeing right now?
Yeah, I think everything seems to be going on well. And in the long term and even in the short term, the government is very much focused on the infrastructure development as well as the manufacturing sector. So I see no reason that over the next 5 years, we should not be able to, do a 3x with respect to our revenue and profits at least. So things seem to be proceeding as per our plan, and I think everything seems to be going on fine.
Okay, you're sticking to that guidance. Just wanted to ask you, you do have, some plans with regards to a joint venture in India as well with K2 Works. Can you just tell us about where that is currently and what would that JV consist of?
K2 Works is a very prominent manufacturer out of Japan for bigger cranes, truck cranes, crawler cranes, and rough terrain cranes. And this is what we intend to do in India with them. Make machines for the Indian market and as well as for the export market. So we principally agreed to form this joint venture. Hopefully this work should get completed in this year. And we should be able to kick off the joint venture and productionize it in the next year.
What are the terms of this joint venture? What is the holding structure? What would the revenue share for you be? Will you have to make some investments in this particular JV?
Yeah. The percentage holding both of us will be about 50-50%. And the overall investment which are envisaged is close to about 150 crores.
I'm sorry, can you repeat that?
The overall investments envisaged are close to about 150 crores.
Okay, all right.
Okay. Well, while we spoke about, what you're expecting in terms of growth on revenue, wanted to understand what you're envisaging in terms of margins as well. For the entire fiscal, what do you think the exit rate would be, and specific segments as well? your cranes, material construction, as well as your agri, what would the respective margins be?
Yeah, I think we should be closing somewhere between 16 to 17% on a company basis, more towards 17%, I would believe. And out of this, the cranes, construction equipment, handling segment should be around close to 17%. At agri, we should be close to about 4-5% by the end of this.
Okay. So you're expecting a margin improvement across the board?
Yeah, definitely.
Okay. That is about the present segments that you operate in. You had also forayed into defense sector. What has the demand been like there? Wanted to understand how much will that contribute as a percentage of revenues this year? Is the margin higher here? We are seeing a lot of order intake.
See, last year we did 2.5% of our revenue actually in defense. And with the current order pipeline in place, it should exceed at least about 3.5% in the current year as revenue share. But in saying this, I would also like to add that we are expecting one of our biggest orders from defense, hopefully within Q2, if it does not trickle into Q3. So that can help us even exceed 3.5% by a reasonable margin within the current year.
How big would this order be?
See, this will be somewhere between 300 to 400 crores.
Okay, 300 to 400 crores, and we could probably hear about it in Q2 or Q3.
Yeah, by end of Q2, but definitely by Q3.
Okay, and just quickly, you had also indicated that you would probably look at inorganic plans in Q2, Q3, which will be outside of the country. Anything you can update us on that?
See, we did have some plans. We still have some plans on, as a matter of fact, but I think they've been deferred. There's certain other developments which are taking place, which I really can't discuss right now. Maybe in due course over the next 1 or 2 quarters, so that it will become more evident.
Okay, all right, Mr. Agrawal. So as and when there are more updates on this one, we'll chat with you again. But thank you so much for joining us today and giving us a sense of what the business is looking like and the outlook going forward. That's Action Construction Equipment. The stock, though, is down around 1.5% right now. We'll do one thing. We'll slip into a short break. As we do that, we are thrilled to announce the College Connect program under our ongoing season of HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective, recognizing college students as the leaders, opinion makers and change makers of tomorrow. The unique initiative encourages the youth to foster inclusive and diverse workplaces, drive gender parity and tackle societal and business challenges when they join the workforce. We are kicking off at IIT Delhi on August 3rd from 3 p.m. onwards with some of the biggest leaders and voices joining us. Stay tuned for that.